Hello ladies and gentlemen, and welcome back. Well, they say that wicks and closes hold the key to market understanding, and if the markets were to close as they look right now, it's probably not going to be very good for the bulls. Yes, unfortunately, the markets have sold off. In the wake of the Snap earnings, negative 27% after market, by the way, we have a sell-off in these markets. On top of that, we've got the UK Prime Minister quitting after only 6 weeks in office, and a whole bunch of other news in today's video. But it's really what's happening underneath the hood that needs to be understood. So join us as we take a look right now. Well, welcome back everybody to the Daily Show where we discuss stocks, commodities, and cryptos. We've got all of those and more later on. We'll start with the news, the macro data, and then we'll move into the lead indicators and the key levels that we should be watching right now. Snap reports slowest ever quarterly growth, but adds new users. So yeah, is it all bad? Not really, but it doesn't live up to the expectations, and it was down 27% after hours. Of course, diving the Nasdaq and other pairs very, very quickly from that level. What else has been happening? Well, unfortunately, it looks like we've finally hit that 5%. As you can see here, by May of 2023, it looks like the Fed funds rate is going to reach about 5%. Now, between April and May is what we're actually seeing at this stage, but notice the difference in curves over time. If you look at the dates here, the pre-CPI date, the other dates that we've had, it's a massive difference in interest rates. And while all of them do curb by the end of 2023, they're not curbing by much. Only a 0.1% rate cut by October of 23. By December, we're looking at one rate down, basically 25 basis points. This is the type of thing that usually helps to beat inflation, but at the same time, it's not going to be healthy for economies. Can you imagine how much people's rates are going to go up? And the cost of living is going to just continue to increase over the next 12 months. So you've got to make sure you save now, unfortunately. Years with fewer up days tend to precede years with above average returns. So 2022 is entering the record books again with horrendous positive days. Only 43.5% of days have been bullish this year. And that's a stat that is not normal because, of course, normally 59% of days are bullish throughout all of history. So if we add ourselves into this, you can see some of the yearly returns and how bad they've been. And then the next year leads on to historically relatively good performance. In fact, 71.4% of the time, it's bullish in the next year. Could that be helpful for investors? Potentially. As we lead into Friday, we know now that the last many weeks now have been mostly negative in Fridays. In fact, the last two have been horrific, negative 2.8% and negative 2.4%. You can see here in terms of the past 10 days. Now, it leads even further back than that. If you actually go about 11 or 12 weeks back in terms of the Fridays, they are mostly negative. Could this be the one that bucks the trend though? Well, it looks to be so based on the maximum pain, the options expiration, which we'll be looking at later on. Remember, this is the big options expiration for the month. This is millions and billions and trillions of dollars of options. No one wants to hold over the weekend has been basically the discussion point of 2022. Take a look at these stats. Tuesday and Wednesday have been the days that if you want to be bullish, they tend to be the turnaround days, whereas Thursday and Friday have been really, really bad, with Friday being actually the worst day of returns historically in 2022 so far. What things do we have to worry about being, let's say, a bull in the markets right now? Well, a lot of it has to do with the utility sector. We brought this up a few weeks ago and we discussed these rare readings that you see in utilities. When basically all of the defensive sectors start to get toxic, usually you have to pay some attention to that. You can tell that this happens usually during very large pullback style markets. Remember, utilities, XLU, is generally considered defensive. The markets or the big participants move into that when they're trying to find something that's going to do better, relatively speaking, to the rest of the market. We've had such bad returns over the last couple of weeks that we will look at today, that this leads on to S&P 500 turmoil later on. And this is probably one of the most bearish stats we have right now. Here's another one, S&P 500 utility sector after 15% declines in the past 21 sessions. And again, the utility sector tends to continue to decline after this point. So not only does utilities tend to go down, but also the S&P 500. What about the surveys? Well, they keep coming in historically very negative. This must be one of the first times we've seen so many negative bear runs, and it's partly the reason why we've been a little bit more bullish over the last couple of weeks. We saw 60.8% of people bearish. The one before that, I think it was like 62%. We then had 54, 55, and 56. Usually when there's so many bears in town, it's hard for the market to push further or lower down, and that's what's so far been happening. There are some good bits of news. If you've watched some of our previous videos, we've talked about a whole bunch of potential bullish stats here. One of the best ones, of course, is always looking at breadth in the market or number of new lows being formed by stocks. So here's the percentage of S&P 500 issues. This was taken last week. Registering the 21-day lows, we saw a decline in that. And this tends to lead to rallies. Now, it's one of those pretty decent stats because you have so much data from it. You can see here over the last 100 years, we've got so many data points to look from, and it's better than a coin flip usually with the way that we see it. Now, so far so good. We are off the bottom since we had the readings, but we're starting to pull back a little bit now. It's time for the bulls to probably get out and show that they control this market if they're going to. Seasonality also points to that idea. Usually during any type of September sell-off, the back end of October into November tends to be strong. We're entering that period right now. So if it's going to do it, it's better going to do it pretty much in the next week or so. Here's all of the big sell-offs over the last 200 years. If you wish to pause the video and take a look, here is also the most synergized markets currently. We have 4 that usually turned bullish and 1 that turned absolutely shocking in terms of correlations to 2022, and that was the 07-08 market. We've just had earnings results for Snap. Of course, that was a disappointment, and this is leading into a bit of a sell-off across tech. Yeah, Snap was really our first look into the advertising and also just new users and how well some of these tech companies are growing. So next week, remember, subscribe to the channel because it is the big one. It's Apple, Amazon, Microsoft, all the big guys are coming out. And what happens there will have dramatic implications. Let's refresh the beats data here, and you can see that 69% beat. So it actually was up slightly. It's just that Snap totally missed and misses 59. Pretty much in line with the start of earnings season so far. Nothing shocking from that perspective. So the VIX dropped, even though the market dropped overall. You can see here the volatility went down. Nothing really to report from the VIX in terms of technical analysis at this point. We know that things like April is hitting 5% here and May on the expected Fed's funds rate. This is the first time we've reached that, and you can just see how really vertical this rate has become. US 2-year and 10-year were both up in the last session, and that's pretty much the reason why stocks ended up going down. They did rally through the start, but then by the end, they had fallen dramatically. And that was a bit of a problem because, of course, we were hoping for the rally to sustain and continue in the previous session. We'll talk more about that a little bit later. But all yields across the board, look at the US 10-year and the 5 years here. Here's the 5-year, here's the 10-year, 4.23, fairly up. And this is not the type of thing you want to see if you're a bull in these markets. So what did that mean? Well, it meant that yields were going up and bonds were going down. Little wonder. So we saw high yield. We also saw my lead bond indicator go down, and also corporate grade bonds. They didn't make new lows, but another 1 or 2 days of down, some indicators are going to be pushing for the S&P 500 to tip over. That hasn't happened just yet, but of course we will report if we do see that. So high yield really was down through the session. Let's take a look at the US dollar. So the US dollar is at a critical point. Now, we discussed the idea of weakness in the last day. Let's have a look how that played out. So we actually got a decent amount of weakness for the start of the session and went down heavily. Then a whole bunch of news came out, I guess, and we rallied straight back up. Now, we're at that level of supply still. It's still possible for the dollar index to fall over, but it kind of has to. For the US market, the stock market to go up, we need dollar index weakness. We do not want a new high being taken. You don't want things past 113.20 unless you're feeling bearish. And if that happens, well, you can be kind of more confident in your position. So it's time for the US dollar to find weakness if it's going to. And it's right around that point right now that it should be doing so. If it doesn't and it breaks through, then we've got to think there's potential more pain here for the US market. And maybe we're entering that 2007, 2008 style scenario. It's very pivotal what happens here over the next 24 hours into probably the next couple of days of trading in early next week. So that's where we got the dollar index. What about the euro? Well, it did something very similar. It actually came up directly to this level and then sold directly off it. So did it bounce in the last session? Yes. Did it do what we wanted it to? Well, it pulled back and then it got a good, nice entry, but it didn't really continue to where we wanted that supply. Similar to the dollar index, as they're basically inversed. It didn't really move the way we wanted it to. Now it's holding on for dear life at this level. If it breaks through here, we could see continuation down to 97, and you've just got to be very careful. It's really close to now or never for this euro to pop, as with the DXY. Similar things happened with gold. Gold did a rally, and then it sold off that previous kind of level of demands that we had, and it just basically sold directly off that and fell back down. I'm not too interested in gold at this trade level, and I'll be looking at it soon in the future, but we'll skip that one for now. Silver, just to update people, because they've been hassling me in the comments, I see you guys, about silver. Not too much going on. It's still in this nice accumulation period. A lot of people got super bullish on silver a few weeks ago. Remember, when the herd gets super bullish on it, sometimes that's a problem. We're back down in what you would call the accumulation range, and this has been fairly stable. I mean, look at this weekly. You can see the weekly here. You can see the previous resistances or supply acting. It's a nice level, and silver bugs may like this area for accumulation, but we don't have any signs that it's breaking up and out just yet. But we'll continue to watch silver when necessary. Now, this is where things got really wild in the US oil. So it sold this level, which we super thought it would. This was a level of supply, and it sold right in that mid of that, the equilibrium point, which was good. Then it rallied, breaking through our downward trend, and then it made a new low. Now, that's confusing to a degree, because usually what you'd expect is a rally through, pull back, long, okay? And it did do it initially, then couldn't get past this area here and sold straight off, which shows you that there was still a bit of supply, still a bunch of sellers on oil. It's now made a new low. You'd have to think that that overall is pointing towards potential weakness here on oil. It's not like a 10 out of 10 or anything like that. It's more like a 6, but yeah, it's the type of thing where you'd be expecting now a turn to the downside. What a flip-flop on oil there in the last couple of hours. XLY, XLP, that shows very similar types of things. We've generally got this double top showing us that there's weakness in the market, but overall, it's doing absolutely nothing. It's not giving us much insight into what's really going on underneath the hood. We'll take a look at utilities now just to show you. This is utilities over the last couple of weeks. Absolutely nosediving. Now, when utilities nosedives, you generally need to pay attention. These are some of the other times it's happened. And of course, we saw it holding very well in the GFC before it went to that watershed moment. And when utilities dived, it was everything in the market just falling over. So that's what we were trying to avoid here. Hopefully that doesn't happen, because yeah, for a few of you, you'll be hoping for it. But if that does occur, a lot of people are going to feel a lot of pain. And yeah, at this stage, we moved back up to this previous level of support, and we've kind of sold off that so far. So we want to see utilities regain control if we're feeling bullish. And if they continue to make new lows, we've got to be very scared about what's coming for this market. We'll take a look at Snap now. As I said, after the hours, it went to $7.70. So it lost 20-something, 27%-ish. It was another disappointing result. And overall, this is the problem. A lot of growth stocks got punished and will get punished because Snap and others are missing. And when they're missing, the multiples compress. And that's really the big story of this market at this stage. It was kind of similar in Tesla. Tesla is doing great, but at the same time, it's not living up to the current need for right now's expectations. The problem is we're in 2022 now. They need to present why they should be worth a lot of money. And Tesla's done it, I think, a lot of the time, but you know, the market's expectations are high. So we've got a long leg doji here. It actually made a new low in the last 24 hours. If the stock markets turn, you've got to think it's 180 for Tesla. If we get another down day, we're going to have a close underneath here. And if that happens, that's going to be consistent with that weekly closure that we had underneath those previous lows. And that's going to push potentially that 180 narrative. And I think that's going to be a super level for Tesla, don't get me wrong. But yeah, I'm still looking for that. If the week closes like this, I do not have that much faith in the stock markets, because look at that. I mean, especially Tesla, that would be horrible. 24 hours, we'll know how that closes. So make sure to watch the channel, because we'll be covering that one. UK 100, no new alerts, even with the Prime Minister stuff. We're not seeing any turnaround, which of course makes sense. If we do get a new closure low underneath this alert, we'll have to pay attention. And if we get a closure high above this area, then of course that could be very positive for squeezes. We're stuck in the middle of the kangaroo range at this point. If we move over to the DAX, nothing new here, so we won't really talk about it. Downward trend line still the aim if we can squeeze into that location. Let's have a look at the US 100. New low formed, and you can see that huge rally that came through, which was in line with expectations, followed by that big sell-off that occurred in the middle of the session. So you had like 1, 2, 3, 4, 5, 6, 7 kind of hours ago it went down. And it was a nice rally. It happened through the news. It probably grabbed a bunch of supply and it sold off. And what that's pointing towards is maybe this double top isn't so fake. Maybe it does want to come down and put pressure back on this bottom end side. 10,800 is a level that I think will be watched fairly closely by the markets. But I got to say, it's tough in here. Deciphering a range within this area is very, very difficult. I've had a look at it, and it's one of those days that I would usually skip, because I hate these third week options expirations. Weird things start to happen, at least for the S&P 500 and Nasdaq, but you can just see it in the charts. It's a bit convoluted. It's been okay the last couple of sessions, but then this one, a little bit more shaky, guys, than I'd like it to be. Let's take a look at the daily here. Again, 3 bullish opens, all followed by big reds, in terms of we basically were continuously trying to gap up or gap somewhere, and we just couldn't get any bulls going. 3 down days. Maybe we are due an up day, but this was symptomatic of some previous issues, and we ended up keep falling through. The wicks and dojis tend to point towards more negativity. We had a long leg doji here. We actually made a new low on the close. So again, that could signify maybe we come down and fill the gap here. 35.82 was where the last gap was that we have unfilled. And that would be pretty brutal, of course, on the Friday if it was to occur. Time of this recording, we've got a new low just about to form here on the futures market. And you can kind of see that 35.82 level, how it was a previous bounce. There's still a lot of demand here, a lot of buyers, but that would be the continuation, the double top. Everything would kind of point towards that 3,600 to 35.82. But you've got to think, if you get down to 3,600, why wouldn't you fill the gap and then potentially rally up? Yep, there's a little bit more potential here to fall, and we'll just have a look at the percentage. That's another 1.7%. If the DXY turns, I believe the rest of the market can turn. If the dollar index continues to strengthen, we've got to watch out down below. They are very synergized at this point. Now, we've talked a lot about options expiration, and this is why we've got 4.8 million total open amount of options, and we have a max pain at 373. We're currently trading at 363. So if you were to achieve maximum pain, you would push the market back up to 373. That would mean a bullish Friday. If you just want to use options, that's what you would be looking for. Of course, there are plenty of people at 330 and 340. It's unlikely these guys are going to get paid. I'm sure they're going to have sad faces. But realistically, 360 is another put wall that we'd have to hope holds for the Friday session. And then we've got 370 and 75 that seem to be outliers as well. So the market may ramp. If it does, it's not really coming off a super technical zone, at least in my opinion. And it's more, this is all the games and fun and games to do with these options expirations. There's a lot of manipulation that goes on around here. That's why some people choose not to trade the Thursday and the Friday coming into the third week options expiration, and instead focus on other markets, the dollar, currencies, gold, those ones, US oil, those types of things. Bitcoin's not showing us anything either. It's really just not strong here today, guys. Usually we have more opinions on it. I don't, because when you think about where it is, it's in the middle of the equilibrium. It's in the middle of the zone. The last 24 hours, I thought it was going long. It did. And then, of course, it's dumped back down to the exact same level that we found it at. And while this is still being bought off for now, there's still strength. An alert set underneath is probably in order, because if it does break underneath, it's going to be a bit brutal. No real news coming forward over the next 24 hours. That's going to be super important. So it's down to the earnings. It's down to, of course, finding out whether the markets wish to turn around and what the manipulation is here with the options. Thanks so much for watching. Subscribe, smash that like button if you enjoyed the content, and we'll see you in the next one, guys. Bye for now.